Can you refinance without an appraisal? Have you ever wondered if you can refinance your property without going through the hassle of an appraisal? This is a common question among real estate investors, especially those using the BRRRR investment strategy. Let's break it down together. Refinancing is the process of replacing your existing mortgage with a new one. This often helps you secure better terms or access cash from your property's equity. Typically, lenders requiring an appraisal to determine the current market value of your property. However, there are some situations where you might not need one. First, let's talk about government-backed loans. If you have a Federal Housing Administration loan, a Department of Veterans Affairs loan, or a United States Department of Agriculture loan, you may qualify for refinancing without a new appraisal. For example, the Federal Housing Administration Streamline Refinance program allows you to refinance without an appraisal, even if your property's value has gone down. To qualify, you usually need to have made at least 6 months of payments and meet certain credit and income requirements. Next, we have conventional loans. These are private loans that follow guidelines set by Fannie Mae or Freddie Mac. While these loans typically requiring an appraisal, there are cases where lenders might waive this requirement. If you have a strong credit score, stable income, and sufficient equity in your property, you might qualify for an appraisal waiver. This is more likely if you own a single-family home and are looking for a rate and time refinance or a limited cash-out refinance. However, cash-out refinances usually requiring an appraisal. Market conditions also play a role. When home values rise significantly, lenders may be more willing to waive appraisals because the risk of lending above the property's value decreases. This can speed up the refinancing process and reduce paperwork. Now, how does this all tie into the BRRRR strategy? For those unfamiliar, BRRRR stands for buy, rehab, rent, refinance, and repeat. In this strategy, refinancing without an appraisal can save you both time and money. It allows you to recover your capital quickly after rehabbing a property. However, many investors look for cash-out refinances to pull equity for their next purchase, which often requires an appraisal. It's important to remember that not all lenders offer no appraisal refinancing, and eligibility can vary. Cash-out refinancing typically requires an appraisal to confirm you have enough equity. Additionally, skipping an appraisal might mean missing out on updated market value information that could help you negotiate better loan terms. So, while refinancing without an appraisal is possible under specific conditions, it is essential to understand your loan type and financial profile. This knowledge can help you streamline your refinancing process and manage your investment capital effectively.